Hi, everyone. Thanks so much for joining. First Monday of the first full trading week of 2026. And it's a really interesting one because we've got a lot of geopolitical noise going on, but it's the price action that we're all really focused on. And the price action is more or less brushing off the weekend news that we had from Venezuela. There are pockets of the geopolitical issues showing up in some assets, but overall, markets yet again prove that they can absorb geopolitical risk really, really well. So we are going to go straight into the chart, as you can see. Here, as usual, I am going to start with the World Equity Index. Now, I want you to follow my pointer. This shows you what's been going on in Europe, because European markets at this moment are open. It's Monday, the 5th of January. We're still waiting for US markets to open. But as you can see, some mild gains, nothing too major. We're seeing some decent strength in the Euro stocks and the FTSE 100. They are leading along with the DAX. Now, if we look at the month that was, so the last kind of 4 weeks, not much of a Santa rally in the US, much more prevalent in Europe. But if we just look at year to date, that's really only 2 trading sessions, so Friday and today so far. Not bad. We're starting on a plus, a very positive note for Europe, of course, and it does look like we're seeing a continuation of the trends. Now, some people did some analysts actually have been speculating as to why that is. Well, I think it's because a lot of what we started looking ahead to 2026 really early this year. The whole market did. So from about the summer, people were thinking, well, what is the Fed doing next year? What's the dollar going to do? What is going to happen with these tech stocks? Is there going to be an AI bubble next year? Well, now we are in that year. We are looking more broadly about what is going on. So as you can see, just looking at the future, so if you follow my pointer over more to the left, you can see futures are higher for the S&P 500 and pretty flat for the NASDAQ. Doesn't really suggest that anything that's been going on with Venezuela, the capture of Maduro, there is a UN Security Council emergency meeting even today, which could show a big split with Venezuela and its allies, China and some of the BRICS countries siding against the US. That doesn't seem to be having any impact on financial markets right now. One area, as I mentioned, there are little pockets where it is showing up. That would be in gold. Gold is up $75 so far. Now, it had been up even higher than that, had been up about $100. If we just look at the gold chart, just bear with me for one moment. You'll see gold back above 4,400, seems to be comfortably above there, but we're not getting to those highs that we saw at the end of December. So the high on the 26th of December, no doubt, 4,549. So we really saw that surge in the gold price. It then kind of weakened a little bit as we got to the last trading week of the year. And it's since just picked up very mildly since then. And even I don't even know what you'd call, we're in uncharted geopolitical waters. It's not a coup. It's not some event, the geopolitical event in Venezuela has not pushed gold to that fresh record high. So that just suggests to me that the market's looking at what's going on, but it's not making decisions based on that. And of course, it's also, again, a lot of people are just back to the office today for the new year. So that's going to have a lot of impact. There's going to be a lot of flows, a lot of things that are going on. And we're going to talk about that more closely. But one thing, as I mentioned, there's a lot of more of the same. This is the VIX index, so Wall Street's volatility index, as you can see, still very, very low. So it's at 15. The average for the last 12 months has been 18.9. So it's below the average level, that suggests that we are having below average levels of volatility right now. So geopolitical risk, the market has really just brushed that off. That's not to say that it won't come back and bite, but for now, this is not seen as a big issue for the financial markets. One thing I do think is worth noting, though, is that if you are someone who looks ahead, maybe trades a bit more longer term, I think what people really underestimated is that Donald Trump isn't frightened to take risks and to do things unilaterally for the US's foreign policy and the US's benefit on the world stage. There are many reasons why he's gone after Venezuela, but a lot of people are now saying, well, who could be next? Could it be Greenland? Could it even be Canada? I doubt it. Maybe Cuba would be more likely first. And what does this mean? This could embolden Russia to go further into Eastern Europe. It could embolden China to go and invade Taiwan. Well, we haven't had any of those things yet. And we think that we'll, but what we do, and we don't think you should be pricing that in or positioning yourself for those kind of risks. What we do think, however, is that volatility is very, very low for this very unusual period that we're living in. So I wouldn't be surprised to see if we do see multiple things happen at once, and I think we'd need multiple geopolitical incidents to happen at once. That could be when you see financial markets react. But we're not there yet. And one of the reasons why markets are absorbing risks so well and geopolitical risks so well is that we've got this massive amount of macroeconomic data coming out this week, including payrolls at the end of the week. In fact, that tops everything off on Friday as US payrolls. We've also got global PMIs. We've got European CPI. We've got German industrial production data. Got loads of other US data coming out this week as well. So there's a lot to distract financial markets, and that's what's going to ultimately drive what the Fed does next, how strong the economy is, where investors want to put their money, certainly in the short to medium term. So that economic data is much more important. But we would notice one thing, the dollar index. Now, the dollar index is fast approaching a really key resistance zone. So it's just had a nice grind higher in the last kind of week or so. And it is fast approaching 98.94. It's currently trading at 98.80. If it can break above that 98.94 level, that is the 200-day moving average. You may remember what I've said about the 200-day moving average. Nothing good happens below it. Well, we could be in a position where it's crossing above it. Now, that would be a medium-term bullish indicator for the dollar. So that is something to watch really, really closely, because one of the, there are many faces and many elements to this Venezuela, the US issue with Venezuela. But one of them is that actually, if the US and US companies now control or will potentially have quite a big influence over Venezuelan oil production. China is Venezuela's biggest oil customer. So they bought more oil from Venezuela than anywhere else. And that essentially means that the US has an upper hand over China for now, because they're helping to work with the leadership in Caracas. And President Trump even said himself that he would continue to sell oil to China. Now, that suggests that he's allowing it to happen, which just tips the balance and could have a lot of macro impact. So whilst we are not seeing this bout of volatility on the back of fear about what the US has done in Venezuela, what it could do, and I think this is what the dollar is showing us, is that it could just solidify the US's position as the world's most important economy, the world's most important superpower. And that could show up in continued equity market strength and also in the dollar. It's worth noting the dollar and US equities underperformed their global peers last year. So will that be the case this year, or could this be a bit of a turning point for US assets? That, I think, is really, really interesting as we go forward. Now, obviously, when we talk about Venezuela, we're talking about oil. Remember, Venezuela has the world's largest oil reserves, but oil has barely moved. Oil is up less than 0.5% so far today. It's just over $61 in Brent crude. It had fallen just a little bit, but there was concerns over the weekend that this would really tank the oil price, because we'd have all this supply coming out from Venezuela now that the Maduro was gone. Venezuela pumps just less than 1 million barrels a year. To put that into some context, the US currently is pumping 14 million barrels a day. So, sorry, it pumps 800,000 barrels a day. The US pumps 14 million barrels a day. So there's a huge disparity, and Venezuela is not a big player in the OPEC space or in the oil production space. So there are actually, what's happened over the weekend hasn't altered any supply dynamics for the oil price at all. And demand, we know demand is demand. That is just the way it is at the moment. Also, Venezuela produces this very heavy, it's probably the dirtiest kind of crude oil that needs to be heavily refined before you can use it. So all those years of underinvestment will take many years to reverse. You're going to have to build new production facilities, drill new oil wells, and you're going to have to build new refineries. So that's going to take absolute years. So the prospect of more supply coming on board is probably unlikely before the end of Trump's term anyway, and we're probably looking towards the 2030s for that to take place. So I don't think anyone will sit there and think this is going to really weigh on the oil price. I don't think any oil analyst is sitting there thinking that, hence why the oil price is actually up a touch today, but is by and large just trading sideways. This certainly won't lead it to a recovery period. Remember, the oil price lost 20% last year. Both Brent and WTI oil were weak. This will probably, keep the same theme going. Not that we're looking for another 20% decline, but I think somewhere between kind of 58 and 62, maybe 65 is where oil will trade, certainly in the first quarter of this year. So I don't see that changing at all, because we've got a supply glut at the moment, even with OPEC stopping increasing their production. Now, some people also were looking at bonds and seeing if it would lead to see some risk aversion in the bond market. Well, we haven't really. Yes, if you look at the bond space, we're seeing bond yields decline. That means prices are rising across Europe, but very, very small moves in the United States. We're not seeing big moves elsewhere. A bit of a big move there in Argentina, but that is largely because this move with Maduro being gone, that could entice more investors into buying Venezuelan bonds, and then that could just maybe take some money out of Argentina to do that. I don't think that's a real big issue there, but as you can see, not too much impact. Now, when we're also, as I mentioned, obviously Venezuela is stealing all the headlines. I don't think many of us expected to be talking about this on the first Monday back of the new trading year, but here we are, and we are talking about it. But it's all about two things this week. What are the themes that are driving financial markets, and about this macroeconomic data? And as I said, there's lots of macroeconomic data, starting with the global PMIs that are released tomorrow, and then we end with payrolls on Friday. We will be doing a market live for payrolls, so please do join us then on this coming Friday. But I just thought it was worth looking at the FTSE 100 and what's been moving really in the last 24 hours of trading. So what moved on Friday and so far today. And you can see that it's actually defense stocks. So we've got Babcock and BAE Systems in the FTSE 100. You've also got some gold stocks, Endeavour, Antofagasta. Remember, they were the Fresnillo, they were the big performers last year. And of course, we've got Rolls-Royce. Now, Rolls-Royce is up nearly 3% in the last day of trading. Had a very strong start to the year. So defense stocks and gold miners have had a really strong start to the year. And that is essentially, we've seen that for the last couple of years, particularly for gold in the last year. So this suggests that actually a lot of decisions have already been made. Rather than going out and having completely new themes, what we're doing instead is compounding on those strong companies that we've got already. Now, we've also got to wait for the US to open, but there are signs that the tech stocks, they could start doing well. Certainly on Friday's trading, what we saw was some gains for some of the second tier level of the smaller AI-linked firms, the Intels, the Micron Technologies. They were the top performers there, with the Magnificent Seven still doing fairly well, but just not in the top 10. So obviously Tesla, that had come under a lot of pressure, but that AI theme is very much still going on. I think Tesla's pressure is idiosyncratic issues around its what it can deliver, its car deliveries. So really, I think what the UK index is telling us now is that it's more of the same. So you've got defense stocks doing really well, we've got miners doing well, and we think that the AI theme will actually continue into 2026, and certainly into the first few months of 2026. So we're not expecting big moves, but it's really interesting time for financial markets. Please do join us for that market live on Friday as well, where we'll be covering the NFP report as it comes out. Thanks so much for joining.